But certainly when one looks at the fundamentals, some analysts are coming out and saying, man, that's a stretch to say it could be worth as much as, let's call it, mid-20s. Where are you?
Yes. Yeah, we're actually at a $13 price target. I mean, the fundamentals, and I don't disagree on the fundamentals. The fundamentals are weak. We have ad revenue growth decelerating in 3Q and 4Q. We actually have ad revenue down and estimated to be down in 4Q because, as been well publicized, they're not growing users or engagement growth. And they're also having trouble pressing up ad load, so that leads to, kind of slowing advertising growth. So the fundamentals are weak, but if you have interested multiple companies that would be interested in the asset, then maybe they can get somewhere around these levels or above. It'll just depend on the interest. And when I look at it for the companies in my universe, I cover Alphabet and Facebook, etc. For Alphabet or Google, it doesn't make sense to me because they already have multiple deals with Twitter, multiple deals with DoubleClick, and they're also running kind of tweets through some search terms. And also, I'm not sure if investors would like a Google acquisition of Twitter, at least from investors that I've talked to. Basically, they have $70 billion in cash on their balance sheet, $30 billion in the U.S. They would use a chunk of that to buy Twitter. Maybe a buyback or other acquisitions, I think investors would be more comfortable with.
Yeah, that's interesting to get that perspective. Of course, in part, the board, as I've reported, was moved to consider a sale when interest came in as a result of those deteriorating fundamentals you described. Hence, if in fact they don't sell, one would imagine there's a lot of air between here and there, but unclear, of course, to know exactly where it's going to end up. Let's move on to Facebook. That stock did suffer a bit on Friday on this news about the change, or at least reporting metrics that weren't quite accurate to their advertisers. Long-term impact from that at all?
No long-term impact. They miscalculated on a metric that was not billable for advertisers. It's very early for video for Facebook. It's probably the biggest initiative at the company right now. I think increasingly over time the feed is going to be more video oriented. And I don't think it'll be a problem. It's a little blip in the road, but not a long-term issue at all for the company.
Yeah, and there's one that very different than Twitter, at least. What I find, John, is people say the multiple actually seems very reasonable given the growth rate. Do you agree?
Yeah, totally. I mean, we've seen multiple compression for Facebook this year, despite the run-up in the stock. I mean, if you look at it, I mean, Facebook's growing. They'll grow revenue 2 or 3 times what Google is, and the multiple disparity it's wide, but it's really come in. So yeah, we like Facebook. We have a $150 target price on Facebook. We think the runway is clear to get there. We like the obviously the video, and they just have a lot of good things going on fundamentally at the company.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.